Hi, my name is Alex Colucci with Gus & Cho Associates. If you're going to go out and buy a car and you want to buy a house, buy the house first, because the car company doesn't care about your mortgage payment, but the mortgage company cares about your car payment, okay? So, if you want to buy a house and you go buy a car first, you're going to mess with your debt-to-income ratios. Now, your debt-to-income ratios, you can't change them. Once you buy that car, it's your car, and if it takes you over what you're looking to purchase for debt-to-income ratio on a house, there's not a lot you can do. You know, you can pay the car off. If it's a lease, you cannot pay the lease off. You have to have a title to a car to get rid of a lease. So let's say you had a little junker in the garage with a title on it, and you went and got a lease. If you want to turn your car in, the lease, and you were titled to another car, we can get away with that, but try not to buy your cars before the mortgage process. And absolutely do not buy a car during the mortgage process. They can check for that. They see things, they see you're running your credit, they want to know what it is. You buy a car, they're going to want to know what that debt is. It could throw your whole loan out of whack. So don't buy a car during the process, don't buy a car before, buy the car after the process. You got any questions on this, give me a call, 630-915-7550. Please subscribe.